Told you that nationally the apartment market has been doing quite well, but revenue growth levels have slowed down a little bit. But in Phoenix, revenue growth levels have really dropped off. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Phoenix update. The Phoenix apartment market continues to follow an unpredictable trajectory. This one really stormed out of the gate faster than expected in 2010 through the first half of 2011. Kind of flatlined the second half of 2011, and it had a big first quarter 2012 performance. But then in second quarter 2012, very disappointing numbers, particularly in higher tier units and in the higher end suburbs on the east side of Phoenix. Let's start with the demand story. This chart is showing you quarterly apartment demand for Metro Phoenix. For second quarter 2012, net move-outs from 221 units. Now that's certainly not a very big number, but that is a big disappointment. Q2 is typically a period of huge demand, and in the past 2 years, Q2 has brought very, very strong apartment demand to Metro Phoenix, and so to see any net move-outs during a Q2 time period is certainly disappointing. So as a result, occupancy growth levels have really slowed. You can see occupancy rates in Phoenix were trending sharply upward since the start of 2010. The market recorded year-over-year growth of around 200 basis points or better in every quarter for 8 straight quarters until Q2 of this year. Now occupancy is up just 50 basis points year over year. It's down 10 basis points for the quarter, and that brings occupancy to 92.6%. And in turn, rent growth levels have really dropped off. Year-over-year rent growth hit 4.1% in Q2 of last year, and it's cooled off in every quarter since then. As of Q2 2012, rents up just 1.8% annually, and that's one of the weakest upturns nationally. So what's going on in Phoenix? Well, it's really not for a lack of job growth. Obviously, more job growth would certainly help, but the job numbers are looking pretty good. Phoenix ranked 9th nationally with 36,100 jobs added for the year ending May. But it appears that the economic momentum is really driving more and more people into the single-family home market. We're seeing a big pickup in single-family home sales, and as you know, the Phoenix single-family market was hit really hard during the downturn. That brought prices well under the U.S. averages, and that's made it more affordable for a lot of people. Initially, we saw a big pickup in investor interest as prices were at rock-bottom prices, and lately we've seen a big pickup in first-time home buyers. We've heard from a lot of apartment operators that lots of renters are leaving to go buy homes. And typically what you see is that first-time home buyers come out of top-tier apartments, and that's where the net move-outs have been. You can see that occupancy loss in Q2 was concentrated in Phoenix's units built in the 2000s and then in the 1990s, down 40 basis points in the quarter for the 2000-plus group, and down 90 basis points in the 90s segment. Both groups also recorded quarter-over-quarter rent cuts, down 0.8% in the 90s and 0.3% in the 2000s. When we take a look at some of the top-tier submarkets on Phoenix's eastern side, we see a very similar pattern play out. You can see that occupancy fell in all 6 of those key eastern submarkets, especially notable drops in North Tempe, North Scottsdale, and in Chandler. All of these areas had recently gotten occupancy up around 95% or better, but now Chandler is the only one of that group at 95% or higher, and that one is right at 95%. And that's also resulted in some significant drop-offs in rent growth levels in all of those areas. Now, some analysts didn't expect to see revenue growth levels in Phoenix start to ease until new supply picked up, but new supply remains very, very little. In fact, it's about at 20-year lows. But the bigger issue in Phoenix is obviously the single-family home market. A lot of momentum going on there, and that's going to remain a big factor going forward. The price is still so low by historic levels, and that's going to be in trouble for the apartment sector. We're expecting continued modest revenue growth for apartments. Look for occupancy to pick up another half point or so, and for rents to climb about 2.5% in the year ahead. And that wraps up for Phoenix. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.